Whether you have a PC, Mac or business computer, no one can afford to lose all of their data all at once. To prevent such a catastrophic event, Backblaze offers unlimited backups for Mac, PC or for businesses workstations for just $99 a year, where all of your business data can be protected automatically and managed through a centralized admin. Backblaze retains all files and their versions for up to a year and has successfully restored over 55 billion customer files already. So, if you do lose your data or are a victim of a ransomware attack, Backblaze will have your back by giving you immediate access to backed up data via an app or even by shipping you an actual physical hard drive with all your data directly to your door. So, if you want to have that peace of mind and support my show at the same time, consider subscribing to their no-risk, fully featured free trial at backblaze.com/moneymacro. That is, after hearing about how a house as an investment can explain the strange situation in China where a house price explosion went hand in hand with a construction boom that led to millions of apartments sitting empty. A situation that is really not unique, as it also happened in, for example, Ireland, Spain and indeed the United States in the early 2000s. You see, while a house to live in obeys the simple rules of economics, where increasing prices tend to either lower demand or, given that everyone still needs to live somewhere, not affect demand that much, the economics of housing as a speculative investment works a bit differently. After all, a speculator wants to make money with money. So if house prices are going up for a while, the housing market actually becomes more attractive for speculators who recognize that once there is upward momentum in prices, this likely will continue. Therefore, speculators will start pouring in even more money into the sector. Now, of course, these new speculators will then drive up prices even more, which again attracts more speculators and so on. Luckily though, increased house prices will make it more profitable to build houses, and so a speculative housing bubble is often accompanied by a big construction boom. However, given the positive feedback loop in many of these cases, even this increased supply is not able to keep up with demand for new investment properties, and because prices are increasing so rapidly, it often makes sense that speculators don't even bother renting out the place in the first place, especially given that laws designed to protect renters often make it difficult to sell an investment property quickly. Which brings us to the second theory, which is that houses are unaffordable due to a speculative housing boom. A theory that can be tested by looking at how many apartments or homes are left vacant. But before we do that, I want to stress that this only works, of course, in areas where prices are increasing or very high at least already, because actually if you look at countries or areas that are experiencing population decline, you will of course also see increased house vacancies. Still, if we look at house or rental vacancies in some of the booming housing markets that we've talked about so far, we can see that it's actually at an all-time low. Indeed, unlike in 2006 in the United States, vacant properties are actually pretty low here, as you can see in this graph, as they are as well in other countries. Although there's one exception, Canada, where I could not find any real-time data, but I found reports that record numbers of apartments are sitting empty in major housing hotspots like Toronto and Vancouver. So does that mean that with the exception of China and some Canadian cities, excessive housing investment is not the main problem right now? Well, not so fast, because we haven't talked about our third theory yet, which has been advanced by Dr. Josh Ryan Collins from University College London. His theory is that the main reason that you cannot afford a house right now is because of cheap money, mainly in the form of low interest rate mortgages, and according to him, this all started with good intentions in the 1980s when politicians wanted to make home ownership more accessible and therefore liberalized mortgage markets. However, if we look at home ownership rates ever since, it's not clear that this actually worked. But as Dr. Collins states, since the majority of mortgage loans finance the purchase of existing rather than a new property, the inevitable result is house price inflation. Simply put, imagine that you have a fixed population of people and fixed housing supply. And now imagine that these people just move house from time to time. And then imagine what happens if you allow all of these people to borrow a ton of money to fund their housing purchases. Well, this may make it easier for first-time buyers at first. Over time, the prices of houses will of course go up, and so will household debt. Indeed, in his paper, Dr. Collins shows the following graph, which indicates that in advanced economies, both mortgage credit as a percentage of GDP and real house prices, that is, house prices corrected for inflation, shot up after the reforms of the 1980s, as well as after interest rates continuously dropped since then. Finally, Dr. Collins points out that Anglo economies like Australia, Canada, the UK and the US were the first to implement these reforms and were also the first to start experiencing these very excessive house price increases. Well, on the other hand, economies like Korea and Germany, which did not follow this trend at first, saw falling house prices during the same time period. That being said, since this paper was written, it has become clear that household debt in quite a few countries, like for example the Netherlands and the United States.
If you're interested in getting a better return on your money, passive income and cash flow, tax benefits that could reduce your taxable income, and inflation protection, all while building a legacy of wealth you can leave to your heirs, then you need to get this free guide on the single most important alternative investment to diversify your retirement income. All you need to do is click the link in the description or type in the URL you see on the screen to learn more.
Has stopped rising and instead started to fall after the crisis of 2007, while in these countries house prices have again shot up. Something we would not expect if the mortgage explosion alone was to blame for the housing crisis. Which suggests to me that in these countries a construction block by NIMBYs, for example, is the most likely explanation behind the rise in prices, while a mortgage explosion remains a big problem in Australia and Canada. However, before we finally call it a day by mentioning which of these three drivers is the most important per country, we still need to talk about the study I mentioned at the start of this video, in which economists from the IMF and Bank for International Settlements now claim that houses have actually become more affordable, not less. You see, if we accept that a house is for a large part an investment, for which we get into debt, then it makes sense to take into account the cost of that debt. That is, if we want to know if a house is affordable these days, we have to look at its price, but also at the price of a mortgage, which is the interest rate. And indeed, IMF economists that looked at an average of 40 countries did find that while on average house prices have gone up by quite a lot since the 1980s, interest rates since then have gone down by a lot as well. For example, while the average mortgage rate in the United States is around 7% today, it was around 19% in the 1980s. So could it be that actually my video title is wrong? Houses are now more affordable than ever thanks to a relatively low mortgage rate. Well, yeah, actually, when these economists combined these two effects into the affordability index that you see here, they did indeed find that houses have become more affordable since the 1980s for buyers that finance their purchase with a mortgage. Which may sound strange, but just to illustrate how big of a difference low interest rates make, let's imagine that you want to buy a $100,000 studio apartment that is fully funded by a 30-year mortgage. If the interest rate is 7% like it is today, this means that your monthly payment will be around $660. However, if the interest rate is 19% like it was in the 1980s, your monthly payment would now be a whopping $1,500 per month. And this actually resonated with me, as when I asked my parents, who bought a house in the late 1980s, I did find out that while they got it for a much lower price than I did a couple of years ago, their monthly costs were indeed actually fairly comparable to mine, given that they paid a much higher interest rate on this lower purchasing price. So while it is tempting to just point at higher prices as evidence that houses are now less affordable, I do think that lower monthly costs are a very serious argument to consider when discussing whether or not we are in an affordability crisis. On the other hand, focusing on average mortgage payments alone is quite controversial for 3 reasons. First,
they warn that a recession is right around the corner and the market will crash, vaporizing America's retirement accounts. Here's what you need to know. Economists are pressing the panic button. Harry Dent says we're facing the bubble of all bubbles. He predicts a stock market crash worse than the 2008 crisis. During that time, 401ks became known as 101ks or 201ks, and America lost $10.2 trillion in collective wealth. He's not the only one warning about the inevitable. Wall Street legend Gary Shilling believes the economy is heading into a full-blown recession. As a result, he sees the market plunging by 30%, and that's at the very least. John Hussman, president of the Hussman Investment Trust, believes stock prices are at their peak. He predicts the S&P 500 could crash 65%, erasing a decade of stock market gains. In other words, stocks are a bad, very bad gamble right now. The only alternative is to find out how to build wealth without Wall Street. Inside the pages of my new book, you'll discover the asset class that exists outside of Wall Street's control. An asset class that weathers economic storms and still generates outsized returns. Now it's finally accessible by the rest of us. This book shows you how to use it to secure retirement, no matter what happens in the stock market. But you don't want to wait until we're in a full-blown crisis. You'll want to discover the wealth-building secrets in this book today. Click the link in the description below to get your copy.
it implicitly assumes that everyone can just get a mortgage, which is typically not the case for the most vulnerable people in society. Second, we should not forget that this graph here is an average of all houses in 40 countries, which means that lower house prices in advanced economies like Japan and Korea are mixed in with higher house prices in countries like Canada and Australia. Finally, as mortgage rates have shot up in the last few years, even the mortgage-based housing affordability graph shows that houses have again become much less affordable in a short amount of time, really getting some people into a lot of trouble. Which is why I think we still need to answer the question why you can't afford a house anymore. Using the 3 economic theories that we have so far discussed, namely theory number 1, that NIMBYs are preventing house construction from keeping up with population growth, or theory number 2, that we are in another housing bubble, or theory number 3, that cheap mortgages and low interest rates are to blame for all of this. But which one of these is the real culprit? Well, that depends on the country that you are in. The good news is that given that we don't see a lot of empty homes these days, except maybe in China and some Canadian cities, most countries, I would say, there is no housing bubble. Finally, while I do think that the mortgage explosion has played a big role and is still very relevant today in Australia and Canada, I think the evidence is strongest now in these last few years for the NIMBY housing supply constraining theory being the biggest problem right now in most economies. So if we want to solve this crisis, I think that in most countries we need to think about putting measures into place that allow for more house construction. Of course, the exact measures will differ per country. For example, in low-density places like the US, Australia, New Zealand and Canada, upzoning in cities will likely be the way to go. Whereas in European countries like the United Kingdom and the Netherlands, the only solution might be to expand cities into land that was previously reserved for nature or parks. That being said, I do think it makes sense to introduce or keep in place anti-speculative measures like the underused housing tax that they've just introduced in some Canadian cities, for example, to prevent another bubble. And finally, even if a mortgage explosion is no longer contributing to house price growth in many countries right now, I do think that we need to have a serious conversation about whether or not we should reverse some of the lenient mortgage standards that have contributed to permanently higher debt and house prices all around the world, and to, in a way, make housing more of a consumption good again. But yeah, that is my take. What do you think? Let me know in the comments below, or consider helping me make my monthly mortgage payments by supporting the channel on Patreon or as a member.